Always different. I've got to be different.
Well, good evening, everybody. Thanks for being here. It's always wonderful coming out of a pandemic to get people together and be in the same room and meet face to face and so on. It's a very special evening tonight. We are here at Rise, sponsored by Barclays, for a CapitELLE sponsored Women in FinTech, coordinated sponsors by Raine International. So thank you all for being here. Appreciate you taking the time. So I want to thank everybody again and all of our sponsors and introduce our panel. So Louise Kirbishley, CFO of Memix, Sophia Pogreb, board member, Next Insurance, Verinda Johnson, Raine International. Good to be here. Thank you guys. So today's topic, democratizing access in FinTech. I think what we'll start with is just open it up, let each of you go around, talk a little bit about personal background, what you're working on, and why do we need to democratize access in FinTech? And we'll start with you, work our way down.
Give it a start. I thought the topic was really interesting, actually, because if you think about democratizing access, it really is the fundamental problem and challenge, but also the opportunity for financial services, and it always has been. So I spent my career in financial services, mostly in the institutional and large investment space, but more recently at Memex, which is a stock exchange. And that's an area where we have seen the most dramatic version of this in recent years. So I think, as most of you probably know, we've gone to zero commission trading on retail trades. What you probably don't know, but we see from our seat, is that the number of trades that are now being done on the stock exchange on a daily basis has doubled. So all of that is retail investors. It's people who are able to access the market that weren't able to access it before. Now, that might seem like a lot. It seems like an even bigger amount when I tell you it's 5 billion shares a day. So a tremendous amount of difference, and that's how explosive things can be when you kind of change and kind of really democratize access. And I will pass on in a second, but I've got one other interesting thing to say about that I think most people probably don't realize and is happening is the retail investor, because of this, has become so important that we're now seeing a wave of stock splits, because all of the tech investors really want to have their share price be at a price where the retail investor can access it too. So I'm going to sort of lead off with that and just say it's not just important, but it really is the biggest opportunity we have in the space.
Thank you. Hi, everyone. I'm Sophia. So my career has also been in FinTech for many, many years now, 30 years. And I've always been really passionate about financial services. I've always felt like, it's money. Money is important to everyone. It's a big topic in everybody's life, and every family's life, and every business's life. And if we can make money work better, we are delivering an impact. It's not just about, me getting a little bit richer. It's about helping people manage their finances, helping them do more with their income, right? There's so many noble purpose, noble mission opportunities in financial services. Most recently, I was chief operating officer at a company called Next Insurance. And our mission is to make small business insurance easier. There's 28 million small businesses in the US. And I feel like 27.9 of them hate insurance, right? Because it's so difficult. You speak to a small business owner about insurance and they're like, oh my God, I need it. I know I have to have it, but I don't understand it and it's expensive and I feel like I'm wasting my money. And so how do you bring all of the innovation that we see in consumer financial services and banking and payments into this somewhat antiquated space and make it easier? And I think it's also a form of democratizing access in that we're helping people understand a product that until now seemed very complex and mysterious, if you will. And I see this going on across the board in financial services, along with verticalization of financial services. Right? We now see investment management businesses that cater to women. We see payments businesses that cater to truckers. I think we see people taking innovation and making it more relevant by focusing on a segment. and building a community within that segment. And that's a really powerful idea, and I think we'll see a lot more of that happening.
Now it's a hard act to follow, but I'll try. So I have been in financial services and technology my entire career as well. And I will say that I rode the FinTech wave in its early years when it was digitizing documents, like loan documents, to the point where we were starting to build applications that we now have seen across the board, whether it was consumer finance or banking or lending or investing. And one of the reasons why this topic resonated, I think not just with me, but with a lot of folks that we spoke with, as well as the panel and Ken, was that FinTech has done something very interesting, which is it truly has created access in a way that hasn't existed before. And when we say access, we talk about access to financial management end to end. So think about banking, think about not just a place to put your money, but also a place to invest your money, to plan ahead. From an ownership standpoint, I think that there's also a very important element that comes in because it gives a lot more independence and the ability to have independent ownership when it comes to ownership of your own financial wealth and health. The part that I think that is also, I would say the most important, at least for me, that's kind of tying all of this, is women in FinTech. So when we think about what the FinTech world has done is it's kind of opened up the doors from an access and ownership standpoint, and has, from a segment standpoint, there is the women segment as a much more global segment that we start to see, where there are companies and there are startups and there are platforms that can actually cater to women, which I think is quite empowering. And I think the last thing is just, it's a beautiful thing to be able to see that it's no longer just a geographic limitation. You know, the ability to access talent, the ability to access leadership, skills, as well as products and technologies that span the globe is pretty freaking cool. So it's something that I think is important for us to point out about FinTech as a space and sector, and is what I'm hoping that we can talk a lot more about today.
Well, let's stay with you for a moment. And I'd love for you to talk a little bit about the creation of CapitELLE and your work at Raine's in FinTech and the focus on people and talent. I mean, coming out of COVID right now, it seems to just be a mad grab on talent, right? Finding people and so on. How does that work in your advisory to clients impact their thinking of how to provide more access, more opportunity, find new consumers, and how important is that diversity of a talent pool to what you're advising clients?
So I'll start with the diversity angle of this because I really do think that in an industry like FinTech, which is innovative, which a lot of people, irrespective of sector or industry, look at as, you know, cutting edge and leading, and it's fun and it's exciting, and people walk around in like sweatpants and, you know, offices, spaces like this. There is this acceptance that maybe skills and talent and leadership looks different. And it sits in different places. It sits in different nooks and corners, not just in the United States, but of the world. Therefore, there is an acceptance of different types of backgrounds, different types of talent and leadership, where we can have a conversation to say, Sophia used to be the COO at Next Insurance, but we actually think that she can run a FinTech shop because of the consumer base that she was responsible for managing. It's not that Sophia now has to be a COO of another insurance company. That type of a mentality and that type of a conversation is a lot easier now from a talent perspective. It also makes it easier from a product perspective because then we can start to think about product and talent and skill in a very level playing field without certain biases that used to exist before. And biases that are, you know, 5, 10, 15 years, we want someone been there, done that. Now, clients say that all the time, but we are more frequently having the conversation about cross-pollination. And I do think that FinTech has created that.
So we'll pass it right down to Sophia. On the operations side, I mean, through your career, how have you seen things evolve, right? Like, have things accelerated in near term? Has it been a slow progression? And where do you see FinTech evolving in this kind of next phase as you look, you know, forward post-COVID and with all this innovation that's happened?
I would say when I started my career in FinTech in the early 2000s, I was often the only woman on the team. If it was a management team, often the only woman on the management team. And it was unusual to have a woman in a data/ops focused role, right? It was more typical for the woman on the team to maybe be on the marketing side or the people side. And I think that that's really evolved. I think that these days, it's almost strange if a leadership team doesn't have multiple women on it. And I've seen multiple CEOs, stress incredibly because they've lost, one of their two women on their team. I think it's become an expectation that your leadership team needs to be diversified and balanced in terms of gender. I also find, to Vrinda's point, that there's a lot of interest and tolerance for bringing experiences from one sector of FinTech into another. I moved from generalist financial services consulting to risk, to debt collection, to insurance, and now I'm about to move to payments. And no one has really said, well, we want someone who has experience in small commercial insurance. No, people go like, oh, FinTech, you've seen this and this and this, that's great. And I feel like that opens up a lot of opportunities and really helps the industry, right? Because the industry is now less siloed and benefits from bringing best practices across various sectors. So definitely see that. And I think this is the golden age of opportunity for professionals in the sector, male, female. I think there's so much opportunity to build and explore and learn and do something that we haven't done before, whether it's functional or vertical.
And look, piggybacking on that, doing things new, things that haven't been done before. I'm really proud during the pandemic. I started a webinar coffee series. It's fantastic. It's, a hit in Fairfax County and beyond. And Louise, you started a stock exchange. I mean, the jury's out on who spent their time more effectively, but tell us, what it was like to create a stock exchange virtually during a pandemic. Like, was there a market hole that you saw? Like, tell us about that journey over 2 years.
Ken, thank you.
Then I'll tell you about coffee later.
I'm going to say that I think you actually had the harder challenge because you did it by yourself.
Somebody who appreciates it. Exactly.
You did it by yourself. You'll be glad to hear, I think, everyone here, that I did not single-handedly start a stock exchange. So it's been an interesting journey and definitely not one that we expected as a management team. I joined Memex just 3 months before the pandemic. We'd only hired about a half of our staff, so 20, 30 people. But my story, just to lead off Verinda and Sonia's comments before, is actually similar to what they just said, is I got a tap on the shoulder from someone like Verinda, and they said, we know that you haven't been in the stock exchange industry your entire career, but there's this small group of interesting people trying to start a stock exchange in some temporary space in Jersey City. Would you like to have a conversation? And I was like, how on earth can 20 people in a temporary space in Jersey City start a stock exchange? And why on earth would they want someone with more of the investment side of the business experience?
Hedge funds for a long period.
Hedge funds, large amounts of capital. And when I went and met them, I'd actually been a purchaser of FinTech for a long time. So my old space, I'd seen a lot of what was successful and what wasn't. And I'd come to believe that really good FinTech companies, you buy them for their technology, but you stay with them for their people. So as a client, it's the people and the processes that really kind of lock you in. And so I went to meet the team and I met, our CTO and our COO. Absolutely phenomenal. They, within 2 minutes, I knew that we knew how to build a stock exchange. They can sort of do it in their sleep. They're really amazing. But then I also met our chief people officer, our CEO, and our GC, and they told me all about the fact that Memex was going to be going back towards the old version of what a stock exchange was. We were going to be owned by our clients. We were going to listen to our clients. We were going to try and create a stock exchange that worked for all of them, whether you're on the retail investment side, whether you're a big institutional investor. And they said, look, Louise, we've got a lot of people from each of these different aspects. We don't have someone with your background. Come and bring that voice. Come and bring that piece of the puzzle to us. So I joined, COVID hits. And suddenly the large Gantt chart we have in paper on the wall is in an office in New Jersey, and no one can access it. We've lost our pen and paper and our whiteboards. But I'd say while it was both challenging, certainly our poor COO and CTO were dealing with closed data centers that they couldn't get into. We also had the benefit of the fact that we were still in temporary space. We were used to being nimble. We hadn't built up a lot of reliance on paper and old-fashioned systems. We were used to kind of, cloud-based systems, and that's sort of how we'd set ourselves up to be. So sure enough, we had the ingredients, and just, I think we maybe lost about a month through the COVID delays. We launched in September. We're now doing about 500 million shares a day. We're one of the biggest stock exchanges in less than 2 years. $15 billion trade on Memex every day. So I think it's working. Yeah. So.
Let's stay on, Louise, let's talk a little bit more about just systems in the United States. And as we think about access and opportunity, how does the United States compare to other countries in terms of, equality, access, opportunity in fintech or financial services in general?
It's an interesting space because, as we were saying earlier, it is naturally very global. And I think one of the interesting things about financial services is, money can move around the world a lot quicker than any of us. My former shop, we used to do a lot of investing in fintech. And I will say we still saw more opportunities in the United States. I do think we have that combination of great talent, great technology, a huge addressable market. So if you're trying to charge very little for something, you want to be selling it to as many people as you can. So the size of our market really helps us. And in general, we've had a regulatory environment which is, let's protect the consumer, but still let capitalism and entrepreneurship work. And so a very collaborative environment. But that said, I think we would miss a lot if we weren't looking globally. Luckily, I think for us in the United States, the second place people tend to come is the United States because it's big. But some of the best, payments businesses have come out of Ireland. They've come out of the UK. You even see a lot of, even emerging markets where countries have kind of leapfrogged technology. And so unless you're looking at them for some of the technology around sort of cell phones and cell phone use, you're missing things because, even when I came to this country 20 years ago, I will say I was surprised by how long checkbooks lasted in this country. So there's this cultural piece too with financial services. Like some countries, they just don't like credit cards. Some countries, they just don't like debt. And so that's the nice sort of human piece to it as well that you kind of see as you kind of look at how products kind of move around the world.
So Sophia, you wear multiple hats, right? Like you've been on the management side and then on the board side. Can you talk a little bit about the perspective and how it may be different when you wear each hat, and the importance of expanding diversity, access, and talent on the board level as well, and how, as young leaders, more people can get roles like that, and how do you even, find boards to be a part of?
So I think I cheated a little bit because I'm on the board of the company that I used to be the chief operating officer of, right?
We're taking notes.
But I will say I now feel like I've recently held 3 roles. I've been the COO, I'm now on the board, and then I have a coaching engagement that I'm doing right now where I'm helping a COO of a company think about how to best collaborate with and manage his board. So, so I'm seeing it from these different sides, right? And I actually just met him this morning and he's like, I don't understand what this board wants. Right, I'm doing the right thing and they're unhappy. And so kind of seeing the two sides and how they're not always aligned, right? And don't always have a great understanding has been quite illuminating for me. But what I am seeing in my conversations is that boards increasingly value operators, right? And kind of operational capabilities, particularly from their independent board members. And increasingly, and Brenda probably knows more, they're looking for sitting execs, people with operational experience to join. So again, I think there's an opportunity. everybody seems to be looking for board seats at the moment, right? It's kind of the trend of the year, if you will. But I think there's a lot of opportunities out there. And now that I've been on my first board for a few months, I see how much value as operators we can add, because we have the operational skill set, but we also have the benefit of not being in the day-to-day details. And so being able to come in and look at the business from a bird's eye view with that skill set, I feel adds a lot of value. So I recommend it. It's been a great experience for me, and I look forward to doing more board work, even as I continue being an operator, hopefully as well.
Things that seem to just be moving at such a fast pace. We're in the right, new companies, stock exchanges, new markets, more opportunities. How do you advise and guide companies to match talent to new opportunities, new market lines, new service lines? You know, with things moving so quickly, how do people stay ahead of the curve and build the right talent base to meet these new markets and new opportunities?
That's the question of the century, I should say. I really do think that it has a lot to do with being heavily advisory and doing it very early on in the process, and not just with the clients that we're meeting with, but I will tell you that I tend to personally learn more from Sophia and Louise and others in the audience that I've had relationships with, not as just, okay, we're gonna, try and find you a person, but you might be the person. So one is that there is a requirement for us as advisors and consultants to spend a lot of time having conversations about what's actually happening in the market. We just had this conversation earlier today with a colleague where we said that, are we telling them that you're being unrealistic? Or are we telling them you're being realistic, however, you're missing 2 or 3 things? That only comes by knowing what's happening in the market. And the second piece of it is that we are very focused on, yes, we want to do this quickly, but we also want to do it well. It's always the speed, quality, and cost, right? The 3 rungs of the stool. And being very honest and open about, given the market where it was, I would say a few months ago, it's slowing down a little bit, but it's still big. Time is of the essence. So let's make sure that when we go into the market, we are very aware of what we're looking for. You're working with individuals and advisors that know where to look and can very quickly start those conversations. So I think that's what makes us successful. That's what makes us help our clients be successful when we think about talent. The last piece that I'll throw in there, again, coming back to the access and the ownership piece of especially within FinTech, is the willingness and the opportunity to think differently about your role, about where those people and where those skills are going to come from. Sophia brought up a really good point about, everyone's looking for board seats. And yes, they're looking for board seats, especially in FinTech. There's a lot of opportunity there. But there's also opportunity to find different types of members. There is opportunity for us to bring in different industries into what is a, non-traditional board seat for a FinTech firm. We've had conversations from a consumer standpoint, from a product standpoint. All of those things happen at that advisory stage. So I think that just making sure that we're having very honest and open conversations, we're aware of what the market's doing, we're having conversations with folks that are in those sitting roles and understand what the market needs, is where we are successful. And we can come in with the right type of talent perspective. The last thing is that I do believe that there is a huge global pool of talent that we are now starting to access and tap into, which we haven't before, specifically in financial services and technology, because we do have people that have worked the last 2.5 years that have been built a stock exchange that are sitting in the US and the UK and in Australia and the islands somewhere. And we have folks that are able to conduct business and run organizations that are global in nature, sitting in, on a boat if they have to. So being open to those non-traditional working styles and talent pools is something that is absolutely essential to any conversation we have.
Yeah. I have a question on that. I see a ton of willingness, taking over from Ken here. I see a ton of willingness to hire in a distributed global way for individual contributor or maybe junior management positions. At the leadership level, I've seen CEOs kind of say, well, I want my direct to be local. Are you seeing that? And is that kind of, where is that going? Do you think there'll be more openness to distributed leadership teams?
That is the second $1 million question. But no, it is, quite honestly, it's a little bit of both. And I hate using that general, it depends on the situation. There's definitely a lot more openness to see different types of talent, to bring in leaders, the C-suite and board level that may or may not be right there, local. I do think it's driven by what is the current mandate. And sometimes the mandate shifts. For example, I've been working with a client where the mandate is to build out a local presence in a new market. Therefore, the talent is local. At the same time, what we've advised them very heavily is that it's good to have one leader here, but your entire team around that leader does not need to be here. That team can be anywhere, because you want to find the right person that's going to understand the product and the consumer versus the person that's going to be sitting in the same office that will miss those two things, right?
Okay. I have another one. I'm sorry.
I'm ready for you.
Just throw something at me when it's time. So I just accepted an offer to start a new job. And my new CEO, I said, hey, is there anything I can read to get up to speed, et cetera? I said I wouldn't start until kids go back to school. So I have 6 weeks. And he sent me...
Handed a board seat.
Good idea. I should... But he said, read this book. And he sent me this book that most of you may have read. It's The 4 Dimensions of Leadership or something. People are nodding. It's short book. I listened to it on Audible yesterday while walking around my neighborhood. And they talk about the importance of building a cohesive leadership team. And the way the author defines this is a leadership team that doesn't hold back, where meetings are controversial and not boring, where people speak up and people attack each other, and then they walk away not holding a grudge, and they still work well together. How do we do this without being in person? And this is maybe a question for Louise, because I think you guys have done this.
Yeah. It's interesting, actually. I'd say my former shop, that was very much the way, our culture. So we used to call it constructive conflict. And a lot of what it came down to is you attack the problem and not the person. And so long as you've got this combined intellectual curiosity and you respect and like each other, you can do that, and you can do that and sort of enjoy it and have fun with it, even if sometimes it's like in the moment frustrating, and then you are very happy sort of afterwards. I'd say for Memex, our leadership very much kind of thought we would be an in-office group. We really did. We've got beautiful space in Jersey City that's never been used. We really, right from our CEO to our chief people officer all the way down, we went into this endeavor really thinking this is going to be an in-person thing. It's super important. We need to collaborate. We need whiteboards. We need all of this stuff. And we were just forced into kind of not doing that. And we still haven't really had an all-person, all-hands group get-together since COVID started. And not only have we now committed to work from home forever, we're 65 people in 8 states, maybe growing to 9 next month, I believe. We're looking at international hires, and it works. And it works because we all did it together, and we're actually about to start launching a second exchange. So we're going to do it again. And so we're crazy enough to try twice. But it has worked. Every now and then, you need a little bit of, okay, we're going through a difficult time, there's a difficult build, and you need to kind of have an all hands. But we've got so used to Zoom that we can kind of have those points of connectivity over Zoom. We can have those real life conversations over Zoom, and we've got used to it.
Yeah. Any more questions? Well, let's go back to you. Let's talk about the importance of some of these new tech companies, right? Ellevest, Coinbase, Robinhood. How important generationally is that impacting the potential path people took before to get into FinTech? How is that all playing out right now?
That's a very broad question. I think that there's definitely more, fintech and technology, I think, are making financial services a bigger part of our lives earlier on, right? Teenagers are investing, right? My 16-year-old has a Vanguard account that she doesn't put nearly enough funds into, and I'm trying to solve that. But there's more familiarity. And when we were preparing for this panel, we actually had a friendly, argument around financial education, where I think Louise may have said, we've made so much progress in educating. And I said, but I feel like we're still, there's not enough, such a huge gap. So I would say, I think these businesses, Robinhood, Elvis, they're helping. They're helping people feel that managing money is not just something that professionals do, right? It's something every one of us can do. But I think there's a huge gap in financial education, and I think it needs to start early on. And I'm a believer, just like we have a health class in middle school, I believe, why is there not a financial literacy class in middle school? I think it's missing, right? And look at the size, and I hope I'm not offending anybody, but look at the size of the payday lending industry, right? I feel like that is a symptom of insufficient financial education. And these are vital skill sets that a lot of our population doesn't have. When we look at, I'm obsessed with 401k participation rates. In my company, 1,200 people below 50% 401k participation rate. And we have matching. And I've done, not a dozen, but probably half a dozen all hands where I've explained why it's important and, how interest accumulates and what you do today will turn into a lot of money in 10 years, below 50% participation rate.
Have you tried making the 3% compulsory on the way in? Because they've discovered that if you have to unsubscribe...
We default to country. This is like, I don't know if you guys have read, if you look at different countries and what they do with their organ donor programs, you'll see have you seen this? There are two populations, right? People are nodding. There are two populations, a set of countries that have very high donor program participation rates and very low. And it turns out the biggest difference is your default. If you opt people in, people stay in. If you opt out, people stay. So we opt people in and people opt out. And when I speak to them, they say, okay, it's either my 401k contribution or my car registration. What do you want me to do? Give me a raise. Right? But I think it goes back to, which is fair, right?
You got your answer.
But I do think it goes back to, how do we learn, how do we develop habits around saving, right? Around financial literacy, around understanding what things cost. I feel like there's a huge opportunity. And we haven't had anyone really attempt, or at least not many, attempt to build a business around financial literacy. There are some companies out there, like Greenlight is one. I don't know if you've heard of them, but there's not enough. And maybe it's because it's tough to make money. I've thought about it quite a bit. I would love your guys' thoughts on this.
But I do think there's been sort of criticism, obviously, of some of the approaches that some of the fintechs have taken to this. But, some of that sort of online, the video, making it easy for people to kind of get educated, learn, teach each other, has started to have an impact on that younger generation that I think still skews very gender, still skews much more male, unfortunately. But we've seen it in some of the outreach we've done as MEMEC. So we've gone to kind of after school programs in Jersey City where we've gone and tried to teach people what does it mean to work at a stock exchange? What are all the different jobs you could do? Maybe kind of think about kind of financial services as an opportunity. And when we've taught people about stock exchanges, the questions that have come back have been so knowledgeable. We're talking 16 to 20-year-olds talking about stocks, asking me about stocks. How can I trade this? What can I do with that? And if I were giving the same conversation to a group of my 50-year-old friends who work in media, they would know less than the people that we met in that after-school program in Jersey City. So it's a start. I agree with you, it's not enough, but it is a really positive sign. And I get a real sense of pleasure when, post-COVID, you're on the subway and you hear these, 20-year-olds and 23-year-olds talking about their portfolio and what do they want to invest in and things like that.
Crypto.
Yes, quite a lot of it's crypto. But 5-10 years ago, that wasn't the case. No, that generation was not interested. They did not want to invest. And they were just like, I want to be on my Instagram account or this. And it's made it exciting for them and interesting for them.
So one more question, then we'll open it up to the audience. But what recommendations do you have to the next generation of people who want to get into FinTech in terms of types of classes, experiences, skill sets to develop broadly, just in general? And each of you can chime in.
Okay, it's on now. So quite honestly, from getting into FinTech, I truly believe, and this might be the most controversial thing I say tonight, I truly believe that it's probably one of the industries that has less barriers than a lot of others, because there is a lot of willingness to consider different backgrounds and different skill sets. I really do think that it also gives the opportunity to understand, where do I want to be when I grow up? I ask this question constantly on a daily basis, but it allows you to think about things differently. So from an accessing the FinTech industry standpoint, I really do truly believe that this is up to where you want to take your career and where you want to take your interest. I have a 13 and 14-year-old, and my 14-year-old daughter is considering a graphic design career in FinTech. And the only reason is because she is an artist and a graphic designer, because that's what she wants to be when she grows up. But she is fascinated by the FinTech market. And the only reason is because she's a Greenlight member, but then she just opened her own bank account and now has actually trades, using both, yes, crypto, and others as well. But I think it's like what it's done is that, again, it's created this ability to access things and think about financial management in a different way. So to me, it's not one skill set, one function, one class. You truly can't do it. It is seizing the opportunity to actually enter the industry, because it is risky, especially when you get an earlier stage. So for me, it's about seizing the opportunity when it arises, because you don't know when it'll come again.
I completely agree with that. I can give you a wonderful example of one of our colleagues. She studied hotel management and is now our chief compliance officer. And she got into the space many years ago through someone she knew, and she started sort of at the junior side in that space. And it just turned out she really likes rules. So it doesn't necessarily matter what you studied. And she is, hands down, in decades and decades of working in financial services, the best compliance officer I have ever had the pleasure of working with. So it's like, put in your resume, apply, don't worry about the experience. 90% of what we all do in life is figuring out stuff for the first time. Something hits your desk and you're like, I quite honestly don't know how to do this, but I think I can figure it out. And I think that sort of sense of people recruiting for attitude and potential is really nice to hear from you. And I think people are being more willing to do that in a tight job market. I think it's really kind of opened people up to looking more broadly and looking at people in a slightly different way.
I agree completely. I think the advice I would add is I would recommend everybody who is in FinTech, or maybe others as well, to try out being on the large corporate side, on the early stage side, and ideally on the advisory side. I feel like seeing those three perspectives, for me, really rounded out my view of the world and my understanding of how to run a business well, right? Because there are things large corporates do really well, there are things early stage does really well, and then the consultant comes in and sees all the problems. And so I think I would recommend it. And for me, every time I've made a switch, I went from consulting to large corporate, and I thought I would hate it. And I thought, I'm a consultant, I like advising, I like doing different things every 3 months. And then I went to PayPal and I was like, wow, I really like owning something. This is really fun. Why didn't I do this before? And then I had an opportunity to go from PayPal to a 20-person startup. And I was like, I don't know if I'm a startup person. I feel like I do a good job navigating the organization. I get along with people. I'm not frustrated by hierarchy. I think I'm a large corporate person. And then I moved and I was like, wow, I get to spend my time building instead of navigating the organization. This is so much fun. Why didn't I do this before? And so every transition has been a delight. And I think part of it is because it opens up my eyes, right, to a different set of things and makes it more interesting. So that would be my recommendation.
Well, thank you, all three of you. Wonderful. Round of applause. Thank you, guys. And I think we have time for a couple of questions before we get back to some food and drinks. Please.
Hi, I'm Faye from Bloomberg. Thank you so much for doing it. I'm talking with a friend. I have 2 young kids, and it's so nice to get out and hear the amount of optimism and the amount of confidence for women in fintech. I think a couple of you talk about crypto, digital currency. So my question is exactly about that. I think there are 2 schools of thought about crypto. One is, it's all Ponzi scheme. Someday, it's going to go old flags, such like the financial crackdown in 2008 is going to happen in crypto. And the other school of thought is there's a real underlying fundamental value, which is about Web3, blockchain, all of this. And I think by definition, the creation of crypto is exactly that, the democratic access and ownership for everyone to have access. And not only we have huge demand on the retail side, we're seeing institutional investors, for example, CapitELLE and Virtual, they recently started a joint venture to start an ecosystem that is a single building platform or an exchange. It's essentially an ecosystem to help more and more institutional investors to get into this space. So my question is to you guys, what do you think, I'm not going to ask you to predict where crypto is going, but essentially, what do you think about, is crypto going to be more and more like traditional finance? How do we really bridge the gap between the traditional financial system where maybe some people think that it's a lot of middlemen and they want to cut middlemen, but there's a really solid foundation about the protection and the new crypto where you can see on the news there's Celsius, there's 3AC that is going bankrupt without the protection of the solid foundation. How do we bridge the gap and how do we regulate this new industry, this new parallel financial system that we're seeing in the world today?
There we go.
It's a great question. So I will say this. This is one of the most fascinating topics in our world today when it comes to finance, right? And I'll use an analogy, which actually I had a conversation with someone in the crypto business that was asking me, did I make the wrong choice? And I said, no, you didn't, if you have staying power. And the reason is because if you think about the origins of financial management and fintech, fintech started with credit cards. And when credit cards first came out, there's plenty of controversy, just like what you mentioned, about are they going to be successful? Cash is king. Who's going to put stuff on a card that anybody can access? And now look at us, right? We have digital credit cards like Google Pay and Apple Pay. So I feel like if we think about it in terms of staying power and we think about it in terms of exactly the points in your question is building the infrastructure, the regulation, and the benefits around crypto, showing the benefits of not just crypto, but also you mentioned blockchain, big deal. It's not going to happen overnight. It does have staying power because there's enough interest and there's enough intelligence from the industry dedicated to it. But it is going to have growing pains. Just like, we don't have flying cars like Back to the Future predicted yet, but we will. Whether it's going to happen in our generation, like I would say, my generation or my kids' generation, that is where we don't have the crystal ball. But from a fundamental foundational standpoint, it's a beautiful thing to be able to build financial services around. Therefore, you're starting to see the interest from the institutional side, right? Because institutional investment typically signals, at least to us, that there's something there Now we just have to figure out the little nuances. So I believe there is staying power if we have staying power. I hope that answers your question.
It's definitely an interesting topic. The nice thing about being on the exchange space is we're generally neutral. It's like you can trade anything you like, but we like to help you get in and out of it quickly and easily. I think there are a lot of benefits in traditional finance that the crypto space doesn't have like that at the moment. So, where clients, individuals can trade on one wallet, but maybe if that wallet goes down, they're stuck, or if that wallet turns out to have problems, they can't get their assets out. I think we're going through what is probably a painful, but probably a good period that happens with any industry right now of people seeing that not everything always goes up forever. And what happens when things are not going so great? Well, generally what happens is you start to see what's going to be successful, what's going to work, what's really got staying power, and what maybe isn't. And then the bad side of financial services, unfortunately, is that because it is wealth and because it is money, it can attract a lot of, bad actors and a lot of people who are just trying to, do things that are, to get hold of other people's money. But to your point, that's financial services forever. Go back in history, little banks used to get started up and collapse. So all of the things that we know and that we've learned in financial services, as they start coming into the crypto space, better regulation, centralized exchanges, all of those things are really going to help mature this industry. And we'll see where it ends up. Will it be as big as people predict? Who knows? Will it be different? Yes, it's going to be different.
Anything to add on crypto?
I'm not knowledgeable. I think I'm skeptical because I don't yet understand. I think I understand blockchain and potential use cases there for digital contracts, for ownership of virtual assets, and I can see use cases. Crypto itself, I'm skeptical. Let's talk again in 2 years. But I'm generally skeptical. And then,
I will do one more, Zoya.
So again, residing in the financial services side myself, in more traditional institutions, we are partnering with what is a helpful aspect for us to be more aware of from a psychology perspective that FinTechs would like to see more of from institutions that would qualify as a successful partner. We move slow, right? We've got lots of overhead processes, but then there's potential scale and reach that they otherwise don't achieve on their own. So anyone that can please help me help them, either now or offline.
I'll take this. We struggle with this a ton. And I hear other startups come to me and they say, we have a product, we have a use case. We just can't get the right person on the phone. We just can't get the incumbents to engage. And I think what we found really helpful is some kind of a structured receptacle, structured, intake process, where if only, the incumbent would say, here's how we work with innovative FinTech partners. Right? This is the process, or fill this out, or speak to this person, or there are 3 phases of evaluation, right? Give us something. Because right today, I think the difficult thing is, who do we even talk to? Do you know anyone? Can you introduce me? Oh, they move so slowly, it takes a year, right? It's like we're a little dog barking up at a castle, and there's no entry point. So I think that would really help on both sides, right? And it would help incumbents identify the most relevant FinTech partnerships.
Anybody else?
It's really important to have somebody that knows FinTech on your team. And this is not the biased, talent side, but it really is what I find is that when we work with larger, more traditional financial services institutions and they have someone that has even spent a few months inside of a FinTech, it really helps because you can have a very productive conversation. They understand the language. The second thing is that this is probably, you mentioned slow, right? Pace is often important in a partnership, but also making sure that understanding that we're going to compromise on the pace. We're not going to move overnight. We're not going to take a year. We'll find that middle ground. And I really do think the last thing is what you were saying too, is that if you have a very clear path of what this partnership will look like. I'm a process person too. What is the process? Here's typically how long it takes. It might take a little bit more, might take a little bit less. But that type of communication, specifically with the growth or revenue teams on the FinTech side, is helpful because the growth and revenue teams on the FinTech side just want to go. And they don't understand it because in their mind, they've built the use case and they've built this, multi-billion-dollar, benefit on both sides. And that's all they can think of. But having someone that speaks the language, having an understanding of a compromise in process and timing, and having that really, really strong communication path is helpful. So that's what I would add.
Thank you again. Just scratching the surface. So important, the work that Raine International is doing with CapitELLE. And thank you to Rise New York again for hosting us and for all of you for being here. Verinda, Sophia, Louise, thank you for being here. If you do feel so ambitious, you can tune in on coffeewithken.com for future sessions. We're hosting Pete Stavros, founder of Ownership Works and the co-head of private equity at KKR on July 27th. Until then, thanks everybody. Enjoy drinks and cocktails.